Bag holders of Applied Optoelectronics had a great week last week as the stock rose almost 100% on earnings. Before we get into the analysis, let's get into the reports from earnings a week ago. We're going to go back to the Motley Fool. Why Applied Optoelectronic stock soared 40% today. This was after earnings last week. So shares of the communication equipment maker that builds lasers and other subcomponents for fiber optic networks released their earnings, and analysts weren't overly optimistic. They predicted the company would lose 28 cents per share on sales of 145.4 million for the quarter. So the bar was set low, and so they delivered a loss, but it was a smaller than expected loss at 21 cents per share, and greater than expected revenue of 52.3 million. So that was one reason why the stock rose that much. Earnings were bad, but not that bad. Still, the news wasn't great, although revenue exceeded analyst expectations. It still declined 21% year over year. Granted, the company succeeded in improving its gross profit margin. This is an important figure in any company's financials. Pretty much, this is top line sales minus expenses, top line expenses. So, gross profit margins improved by 250 basis points to 19%. However, the operating profit margin deteriorated. So this is the bottom line cost minus top line sales. Deteriorated dramatically, falling nearly 14 full percentage points to negative 38.5%, as falling revenue struggled to keep up with rising operating costs. So again, given the size of Applied Optoelectronics' real losses in Q2, though, what explains investors' sudden enthusiasm for the stock? Well, again, they reported bad earnings, but it wasn't as bad as Wall Street expected. But here's the kicker. The real reason investors seem to be betting and bidding up the stock today, it was not only on bad numbers, but management thinks that Q3 could be a better quarter. So in the markets, it's all about forward guidance, not only in the broader market, but each company's financials. Stock market is a forward viewing mechanism type system, so it's all about guidance. Turning to guidance, Applied Optoelectronics said it's expecting a sharp rebound in sales this coming quarter, anywhere from 60 to 66 million. That's a whole lot better than the 48.4 million the analysts have been forecasting for Q3. All right. So with that said, let's go to the charts. We're going to start with the monthly chart. And because of this huge surge in price has now formed a monthly buyer's level. We'll say at 625. All right. Because of this huge surge, pullback is inevitable, right? After moving up almost 100%, pullback is definitely inevitable. Just looking at current price going up and to the left, you definitely got some headwinds from current price to about $15, $16. Let's go down to the weekly chart. Again, okay, this is interesting. So this zone might be used up already, as price shot up just to pull back, penetrating the level more than 50%. So this level might be used up, but still needs to be respected until it's breached. right, so I'm going to go ahead and look at current price, go to the left and up. So the nearest headwinds is going to be $1 from current price in this $12 to $14 area. Let's go to the daily chart. And you can see it's a little bit better. So, you had a basing candle, had a rally in, basing candle, and rally out. Price trickled back down. And then on earnings, prices shot up. It's actually a gap up. What's interesting about this level on the daily chart, you have the 50-day moving average coming into the zone. That should serve as dynamic support. All right, so let's go to the left and up. All right, so you have this gap fill. You have another gap here at 1175. So $16 is where the real test begins. That was the origin of this move down to about $7. Price could not come back to that $16 level before moving down once again. I'm anticipating a pullback. It would have been nice if price closed above the wicks here. That didn't happen. So Monday's going to be interesting. I'm expecting a pullback. Price can't go up 100% without a pullback if the continuation is going to occur. So the first hour of the opening bell on Monday should give you an idea. Definitely if it gaps higher to move lower, that's going to mark a short-term top. Now if it gaps down to move up, then we should see a close above the pivot high to the left. I would prefer a gap up to move down. That's what I'm hoping to see. That would be actually healthy if this move higher. 216 is going to continue over the subsequent months. Thanks for watching. Subscribe. Please like the video.